So let's make a full breakdown of the situation that we currently have on Euro JPY. So starting from the monthly time frame, what we have is a market that clearly has created this W formation. Now, after a W formation, what do you expect? You expect the market to give you a push to the neckline of the formation, aka the previous resistance, which is now turned support at this area. So basically, on the monthly, what you actually would like to see from here is the market to give you a nice move to the downside and go and test this zone. Now, if you want information on a retracement in the market, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see is that the 0.382 currently is just below the neckline that we have here on the monthly. So the previous monthly resistance now turns support. And we can expect when the market will reach this area to actually create a wick that actually goes and hits this first retracement level. Going down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see that clearly the market has just created a W formation and completed an impulse correction, an impulse pattern to the upside. In fact, the market created this impulse correction and impulse pattern to the upside, creating a higher high. And at the same time, in creating this pattern, the market has actually created this move to the downside, move back up, try going lower, and then broke everything back to the downside, therefore creating this W formation. So down, up, down, up. And after a W formation, what do you expect? You expect the market at least to give a retracement to the 0.382 of the Fibonacci taken on the new impulse. And then overall, you would like to see the market actually make a retracement all the way down to the neckline. But in this case, let's just take a first take profit target at the 0.32. If you're asking yourself why, is because in this case, this W formation is an overextended W formation. And in an overextended W formation, you expect the market to make a retracement to the first level of structure, which in this case is this previous resistance, which is now turned support at this area. So you have a first downside target at this zone. Going down on the daily, what do we have? On the daily time frame, we can see that the situation is quite interesting. We have a market that has continuously created higher highs and higher lows here on the daily time frame. So obviously looking for any shorts at the moment is just out of hand because we would be shorting a bullish market, which is never ever a good idea. So how we will be approaching this kind of situation, students? Now, first of all, as we have just seen, if we are targeting this zone, we will never make a proper risk to reward to the downside. And anyway, we can't be looking for the short. So we would never get a good risk to reward to this area. So since we anyway have to wait for a clear shift of the structure on the daily time frame, at that point, if the structure on the daily will actually shift, we can be looking for a deeper target. Actually, what we could be clearly targeting is the neckline on the monthly, because we know that this is where the market is actually supposed to go. So let's take our monthly target to the downside and what we can see. Then on the daily, as we have just seen, everything is still bullish. However, there is one very important thing, that in this last impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle. Now, this red candle is a structure area, which at the moment is acting as support. So when the market will go back and reach this area, we actually expect when the market will reach it, that it will actually reject it to the upside and continue to the upside. That is what we expect. However, that might not be what the market actually does, because the market might manage when it reaches this area to actually break the zone to the downside. And that is exactly what we will be waiting for, because if that will happen at that point, the monthly, weekly, and daily time frames will all show the same direction. So we will have a good probability setup that I will now speak about. But before showing you the setup that we can be looking for, let's first go and give a quick check at what we have from a COT perspective if we check the data for the Euro and for the JPY. So what the biggest banks and institutions are currently doing both from a Euro and a JPY perspective. Now checking the Euro, what we can see that institutions went from having 147k longs all the way up to having 242k long positions. And net positions went from being negative to being positive. So from having more shorts than longs with 271k shorts and 157k longs, all the way up to having way more longs than shorts with 242k longs and 84K shorts. So euro has been aggressively bought by institutions. In fact, we have seen big moves to the upside on all euro pairs. But this also means that the move to the upside has already been made. So we can actually expect some profit taking on this massive amount of longs and the euro pairs to make a retracement finally to the downside. And if we go and see what we have from a JPY perspective, we can see that with the last reports, institutions have added a lot of longs on the JPY, 12K longs, bringing the longs at 62K from the 42K that we had here, and the long exposure at 37%. So we can definitely expect the JPY to get strong and the euro to give us a retracement. However, until the market will remain above this support, we cannot be looking for any shorts because the market can and should continue to the upside, okay? But only if the market will actually manage to break below the structure. At that point, this previous resistance that was towards support here will be broken to the downside and turn again resistance at this area. And after the break on the retest of the structure, what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bullish to a bearish market. And only at that point, after the market will have shifted from a bullish to a bearish market, we will be adding Euro JPY watchlist. And at that point, as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse correction and impulse pattern to the downside and completion of the monthly and weekly W formations. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.